All right. Good, welcome. I'm live again. Haven't been live in a very long time. Also never with a video camera. I thought, why not? So you can see what my face is doing, get some emotional insights. Yeah, I've started a new job, and for the past 5 weeks I've been focusing on that job. Of course, onboarding is always key, but I felt the urge to also continue my project here on YouTube, and that's why I'm streaming today again. I will mostly analyze the chart, see what I've missed this week, what were the best trades, what were the worst trades you could take, mark some of those up, find interesting entry and exit locations, stream probably for half an hour. Let's see how it goes. For me, it's just important to have the consistency back, and even though I work in the day job, I still want some hours in front of the chart and also some hours in front of the camera, recording and streaming the whole thought process live, as I prefer the transparency that you get when you do stuff live uh, instead of a recording where you of course can fake your way around. Okay, so we're currently looking at NQ NAS100 closing the day in about 40 minutes. Let's zoom out a bit. We're on a 5-minute chart. On the chart trading view, you only see some exponential moving averages, a couple of them. The key one is the turquoise one with 20 exponential moving average. So we saw a sell-off from the open. Not a lot of follow-through. Then a trading range. First breakout of the trading range. Back into the middle of the range. It's a magnet, but not much further. And then we saw a lot of bears coming in after the first sign of weakness. And one leg down, second leg down, small pullback here, third leg down, small pullback here, fourth pullback, fourth leg down, and that was the end of it. Okay. I've not been actively trading, but of course I've been monitoring the charts and also following Tom, what he's trading the last few days. Quite interesting to see what other traders are up to. And yesterday I was observing the open here. I will zoom in a minute. Just need to mark up the chart here, because yesterday when the market opened, I had the thoughts, okay, what will we see? We have the range from yesterday, just marking it up. This is the open, this was the high, and we have the close somewhere here. Good. So I'm zooming now into 23rd of September, yesterday. So here, market opened, and I was watching this, I think, on the phone on the side, quite eager to see what Al Brooks often says, you know, when market opens, we have a predefined range. That's the range from yesterday or the range from last week. There's always a range, right? So the range was here. I always like to measure it. So it's about 200 points, less than 1%. Market opened. we had basically two options. We have this tiny overnight range. We start with a bear candle. Now we're thinking, okay, where do we go next? After this candle closed, first 5 minutes. I know a lot of people ignore the candle, but I don't ignore it. The next logical step is we test one of the levels from yesterday, which could be the close or the open. In this case, we were so close that the next bar went down to the close from yesterday. Speaking from the perspective of yesterday, so actually 2 days ago. And now we reach the first level. And how do we continue now? Okay, we could sell again below bar 2. And now the price slows down and we are in this two-sided trading range here. And I was watching it very closely, thinking, okay, what would L. Brooks do? He will probably say, yeah, we have a good probability that we go back up and break out of yesterday's high, or at least test yesterday's high, because most of the trading days actually we break out above or below the range from yesterday. So it was just a couple of points, about 50, 60 points to go back up here. And I was thinking, but what happened if it will go down to yesterday's low? And really observing those candles here, they might not look like much, but pretty interesting price action happened here 5 after 4 in the afternoon, European Berlin time. So we saw a sharp sell-off after this first 5 minutes pullback here, which got immediately bought up again. Price went back up for a second, or actually not for a second, for a couple of minutes. For 1 minute it looked like we would get a continuation down, but we didn't. Then we got the same thing a second time again, and then all bets are off for me. Trading range is established, and I think a lot of people were looking for a retest of the highs. 3 bear bars around the open were not enough for a lot of people, but in the end it didn't pan out. We got a long trading range for a couple of hours, 35 bars to be exact. Yeah, around 35 bars, 3 hours. So I guess if I would have traded it, I would have needed a lot of patience. So nothing exciting, which is always a great time for me to analyze it and to look in a lot of detail what actually happened on the chart. So whenever we have bulls buying big bear bars, trading range. When we see sellers below bull bars, trading range behavior for me here, which we saw quite often. Yeah, bulls buying here, bulls buying here, bulls buying here, and selling below the bull bars close to the top of the range. So I was noticing, okay, we have our first bear move down, 3 bear candles, but with visible wicks, not ideal. Then the open is over. 50% of the time the direction is wrong and we go back up. This time it was more complicated. So my first area of interest, I want to have price go to the first pullback here above those 2 weeks. Price went once again there during this day, never again. So this is a location I'm writing down, I'm looking at, and why? because I always want to trade where price never comes again. This is a good trading location for me. If I sell or buy in this area, everybody will do that. For the next 3 hours, price is here, and you need to ask yourself why price is still there. And price was there until enough sell orders got in. Nobody wanted to buy anymore. And then price went down. Of course, we can look at that in detail, but for me, it wasn't that interesting. Then I wanted to identify quite in this trading range where we have the best trades. And above the first pullback, great sell here. And again, it came very close here. So probably selling below the first bear bar here would have been probably my choice. Why? We have a quite nice stop above this, where price rarely ever closed, got close here, and it's immediately the first conservative target is the bottom of the range. So that's already a good trade for me. And then it's just up to good trade management for how long I will let it run, how defensive I am. Do I already set a break-even stop once price moves down here? Then I will get out of my trade here. It's reasonable. It's of course annoying if you didn't take partial profits here. So that was one of the trades I looked into, which I would like to execute it. I wouldn't have taken the long here, but it was quite interesting to see that after the big bear bar, we got some immediate buying here. The second, third double bottom here. And this really opens the trading range for me there. Good. Other good entries for me were once we saw the first break of the trading range. So we got below the established trading range we had here for already 2 hours. First dip below, got bought again. Similar behavior as we saw here. Big bear bars getting immediately bought. Good scalp, but that's not what I'm looking for. Then we see, okay, we get back into the range as it is a magnet. We get a nice rejection wick immediately after the first leg up here. So this below is already a good short entry for me. We could bet on a tight stop, a few ticks above. We could bet on a stop above this high, or also up here. It's only a 30-point stop. It's all good. If you care for 1-to-1, we can have a stop here and aim for a conservative profit target of a retest of the low. So this is second great entry for me. And then the third entry, you see it already, it's quite obvious after the fact. Just marking it up. So quite interesting. We see here first leg up, pullback, second leg up, failed. We have here this nice wick, down again, but immediately bought up. So it was a bit too early. And then another leg up, did not quite reach the previous high here. Bears let it come up above this nice bull bar and then sold. And price closed super aggressively on this chart on its low. which gives me a good indication that we will see lower prices sooner than higher prices here. And I want to enter here short with a limit or market order and see how far we go. Why am I doing this exercise? For me, it's great. Of course, I'm not wishing that I have been in those trades. It's not a healthy mindset. But I need to see those patterns, especially after a maybe on the first sight confusing trading range where the best trades are hidden. You will probably find other trades, especially nicer trades on even smaller candles. But I like a little bit of momentum here. And if you entered on one of those trades and had the patience to sit this out, not have any FOMO short entries here or here or here, yeah, I can pinpoint all of them, but that's not the point. You see them anyways. Now you're in the trade, let it run. Where do you exit? I was looking at this yesterday late. I was looking for a good reason to find an exit. What is a good reason? So for me, a good reason is we see a double bottom, excuse me. Double bottom, and then a quite okay leg up. We have here a wick, sold off again, but then this leg here, this gets me suspicious, you know. There we have weaker and weaker bears, wicks. So here I'm losing interest, but only here. This leg down is quite okay for me. I could see a little bounce, but then I needed a stronger reaction. But it didn't happen here. We were close to the end of session. We reached one of the targets that we had from the open, which was the open from the day before, from Tuesday 22nd. A lot of traders took profit. Scalpels were still trading here actively, of course. But there's no swing to be made here anymore. Okay. Good. Those were, I think, my thoughts when I was looking at the charts yesterday. I marked them up only on my phone before, and the drawings didn't sync, so I redid it for you today. And I think that's it so far. Maybe one thing I was thinking of, yeah, Bell Brooks always says, once you're good enough to enter in the reverse direction of the trend on huge bars, you finally made it as a day trader. I kind of have this quote in my head, and I was looking yesterday on the chart here and looking at this massive bear bar for the day, of course, 50 points. And I felt like, okay, is there a reason to enter here already? Is it already climactic enough? We were close to a point of interest. So scaling in, maybe if you can do that with small enough size. But the bar afterwards, people definitely took profit or even scaled in the other direction. Quite interesting to see that on this level, that we have a nice bar which could be the last climactic bar after a couple of legs down. And then the next bar was already a bar where people took a lot of profit, scaled in the other direction. We got a first 5-minute pullback, and price even stayed above this bar for a couple of minutes. For actually 35 minutes. So yeah, also not looking only at the best entries, but also the best exits. Could you have exited here, market on this candle close, and called the session, end for yourself? Maybe, because in the end you would have waited 35 minutes for a little bit better price for 7 points. Yeah, of course, you could have edited the first pullback, get a little bit more out of it, waited even longer. So in total, an hour 20. If you, for example, would create your exit with the limit order here below the second low. But this is where I ask myself, is it worth it? Okay. So exit area, just to mark it, was for me this lack of bear strength, quite a nice reversal bar for the bulls. Then a doji, buying above a doji, usually not the best place to buy, but here it happens for 2 bars. Then we got a pullback, and this is the last good exit price you will get. And everything after that, you might get into the area of your first or last ad. So not optimal. Okay. So I think that's it. I want to get back into the habit with regular streams. I hope I can do that now, back in a full-time coaching job. If you made it this far into the video, which I doubt anybody did, I want to give you the offer. In the description there's my email, and I'm giving away free coaching because I'm coaching software development teams and product development teams for many years, and also coaching people individually. But I want to get into coaching also day traders and traders and get some practice there, because of course it needs a special kind of skill set, and yeah, probably a different process than a corporation business coaching. So yeah, there's the offer. If you made it that far, check out the description, write me an email, and let's get in touch. And yeah, I'm offering that for free if you're interested. All right, then that's it. Ending the stream here. I hope you got some value out of it. Take care. See you in the next one. Bye bye.